Thank you for checking out this video on loan modifications. You know, foreclosures occur when lenders sell your home at an auction because they've not been receiving the mortgage payments. And this process is not only emotionally distressing for homeowners, but it's also expensive for lenders. Both you and the lender can benefit from working out a way to keep you in the home and getting back on track with your mortgage payments. Shoot, let me start over. Thank you for checking out this video that I've made on loan modifications. This is a two-part video, so I encourage you to watch both halves. Okay, the foreclosure occurs when a lender sells your home at an auction because they have just not been receiving their mortgage payments. And this process is not only emotionally distressing for the homeowner, but it's also expensive for the lender. Both you and the lender can benefit from working out a way to keep you in the home and get you back on track with your mortgage payments. Now, the biggest mistake that I see homeowners make time and time again when facing foreclosure is not having a good understanding of the loan modification process, the criteria for approval, and the negotiations involved in a loan modification agreement. But before I get into all the nuts and bolts of loan modification, let me lay out three truths or realities about being in foreclosure and the loan modification process. You know, the first truth is this: the only way to end the foreclosure process is to take care of the missed payments, along with the penalties, interest, and fees associated with them. You know what? No matter what you read on Google, there is no forgiveness of what is owed to the bank, and rarely have I seen loan modification result in lower payments. You know, missed payments and the associated costs can be recovered by the lender by adjusting the terms of the loan or adding them to the end of the loan. You know, it allows the borrower to manage the arrears, what they owe, over a more extended period of time rather than catching them up immediately. Now, the second truth is this: although banks may position themselves as being benevolent in regards to your debt, they're really not. They're in business. They're in business to make money, and they do it with other people's money, so they're really obligated to do so. So beware of whatever modified arrangements that they make. They are not saving you money, they are rearranging things. And the third truth is this, and let me just warn you, this may not be what you want to hear, but it's the truth, and I think it's important to tell the truth. There's only three things that you can do to end the lender's foreclosure pursuit for your home. And that is, number one is, let's pay off all the arrears. The second one is obtain a loan modification. And the third is sell the home and stop yourself from having continued stress and also losing the equity in your home through a foreclosure sale. Now, there are multiple strategies that can be utilized to stop or pause the foreclosure effort, but you know what? They are only temporary. They do not remove the threat. Those are typically used to get time to enable you to accomplish one of the three ways to end the foreclosure that I just detailed for you. So let's talk about what a loan modification is. See, a loan modification modifies the current structure of your loan to relieve you of having to pay the missed payments immediately and hopefully keep your payments manageable. Unlike refinancing, a loan modification does not replace your existing home loan with a new one. Instead, it restructures your existing loan based on the financial details you provided during the application process. For instance, if the cause of your financial hardship is that you lost your job and you were unemployed for a period of time, which makes it impossible for you to stay current on your mortgage payments, a loan modification could help you avoid foreclosure and stay in the home. Or if the cause was your financial hardship was that you experienced an illness that impacted your ability to stay current on your mortgage payments, a loan modification might help you avoid foreclosure and stay in the home. If you've fallen behind on your mortgage payments, a loan modification may seem like a real lifeline. Now, loan modification is a process where your mortgage lender agrees to alter the terms of the existing loan to get you back on current status. It can involve modifying the interest rate, extending the term of the loan, or even changing the monthly payment amount. The primary goal is to help the borrower who's faced this hardship that's caused the financial problem, and they're at risk of defaulting on the loan. And when you're facing a financial hardship, the first step is to contact your mortgage lender. You'll need to provide detailed financial information about your situation. This includes your income, your expenses, and any other relevant financial details, very similar to when you originally applied for the loan. Now, the lender will review your application to determine if the loan modification is a viable solution. Now, I will just tell you, the process can be quite exhausting, but the outcome can be a lifeline and end the foreclosure. By modifying the loan terms, you can achieve a manageable monthly payment, making it easier to stay current on your mortgage and to avoid the foreclosure. Now, to qualify for a loan modification, you must demonstrate a significant financial hardship. This involves providing comprehensive documentation such as bank statements, pay stubs, and tax returns. Your mortgage lender then will scrutinize your financial history, including your credit score and other debts, to assess your eligibility. It's crucial to show your financial hardship is not long-term, such as a job loss or a medical emergency that has been resolved or will be shortly. This distinction is important because lenders need to see that there is a high likelihood that the loan modification will result in you successfully staying current on your mortgage payments and that you will not have any further missed payments. Now, I've built an informational website that's just rich with information that you can learn about foreclosures. So I'd encourage you to check it out because there'll be many questions that arise, and I think the majority of them will be answered there for you. And the website is www.foreclosuresolutionsnc.com. Now, if you need additional information or you have additional questions and want to discuss the specifics of your circumstances, please reach out to me through the website. I'll be happy to go over and help you in whatever way I possibly can. Now, like anything, there's pros and cons to loan modifications. And when it comes to considering a loan modification, you have to consider those pros and cons. You should be aware of them to make sure that it makes sense for you. So let's go over the positive things, the pros. If you get approved, it removes the default status from your mortgage and it shows you as current. And when approved, you can resume your regular loan payments and the late fees and the penalties are taken care of. Now, a verified complete status on your loan modification application package can also be used to stop the foreclosure activity while the underwriter is evaluating your application. So it sort of takes the pressure off and gives you time to wait for the result of the review. Now, for borrowers who have overcome a temporary financial setback, a loan modification provides an opportunity to regain your financial stability. By keeping the loan terms manageable, borrowers can resume the regular payments, restore their credit standing, and continue to build equity in their home. All right, so let's talk about some of the negatives, the cons. Loan modifications are for borrowers who have experienced a temporary setback. If your hardship is permanent, such as a significant loss of income with no foreseeable recovery, a loan modification will not be the right choice. Since lenders typically offer payments close to the original amount, borrowers facing ongoing financial hardship may find themselves at risk of redefaulting on their mortgage, even if they get the loan modification. Now, loan modifications increase the overall cost of your living in the home. When lenders modify a loan, they usually extend the loan terms and they add the missed payments onto the end of the loan or add it to the existing balance. All of this will increase the amount that you owe. This can also result in higher overall interest rates paid over the life of the loan. So while this approach allows you to avoid foreclosure, it can be frustrating for borrowers who want to minimize their long-term debt. The other con is, the negative is, the loan modification application process is lengthy, it's confusing, and it's time consuming. Each lender has its own requirements, and it's difficult to get updates. It's difficult to get the application process package defined as complete, and it's just tough to navigate the whole process alone. And borrowers often express a frustration with the lack of transparency and the time commitment required to properly pursue the loan modification. And another thing, a loan modification, it can impact your future ability when you move on to your next house and what you can qualify for. If they have moved a chunk of the arrears part that you owe and put it at the end of the loan, and you sort of forget about that when you're going to look for your next house, and all of a sudden you realize, oh, we're not going to net as much out of the sale of our house as we thought because of the loan modification. And the last con is just really important to be aware of. If you get approved for a loan modification, they don't make it it's not a firm approval for it. It's a temporary. They give you a temporary trial period that's usually about 3 months long. Now, during that time, they're going to closely watch how you make your payments. Their standard is going to be very, very tight, and they're very rigid on it during this time. If you're late by 1 day on one payment, there's no grace. They will remove the loan modification option, and you'll be put right back into foreclosure. Now, there's some pitfalls for you to avoid in your loan modification pursuits. When you fall behind on your monthly payments, your lender will likely offer you a loan modification as a solution to correct the situation. When you speak to the lender's representative, they don't do anything to pre-qualify you for the program. And what I mean by that is they don't ask you any questions to determine if you are close to meeting their criteria for being qualified for a loan modification. Now, in part 2 of this topic, I'm going to detail the major criteria that you must meet to have a hope to obtain the approval on your loan modification application. So you want to make sure that you continue on and watch the second video. The problem this causes, though, is that the borrower can inaccurately believe that they have a real possibility to receive an approval for the loan modification when that may not be the case. This can cause the borrower to really put all their confidence in getting the approval, to take all this time to pursue it, when with just a couple of math calculations they can know if they had a good chance or a bad chance to get the approval. I think it's really a shame that the lenders don't take the time to do this pre-qualifying, because this is something that I can help you with if you wish any help in determining it. This overconfidence in the loan modification can rob you of the valuable time that you have in the foreclosure timeline that you could use to pursue another solution and actually end the foreclosure process. The other thing to be wary of is be wary of companies that promise to stop foreclosures or guarantee a loan modification. Foreclosures are required to be made public, in public record. So there's a lot of people that you're going to be receiving calls from, people and companies inquiring about your plans. Like anything, you need to be discerning. Some of these people are really good, and their heart is to help you, but there are others who are only seeking an opportunity for their own benefit. Now, if you have a company that contacts you and they say, hey, pay us this fee and we can guarantee that you get your loan modification gets approved and we do all the work for you, that is a big, big red flag, because no one can make that guarantee. So don't pay for their help. They're not telling the truth. Preparing the loan modification package and then the determination to do what's necessary to follow up with the lender is time consuming and it's frustrating. So it may be that you need to find some qualified assistance, but be wary of the guarantees and significant upfront fees. Now remember to check out my website by clicking on foreclosuresolutionsnc.com, and don't hesitate to reach out through the website for any personal consultation. And make sure you view the second part of this topic so that you can learn how the lenders decide if you should be approved for your loan modification. Thank you very much, and we'll see you in video number 2.